about the market, the updates, things of that nature. At that time, I kind of felt like the market was heating up a little bit.
The only thing that went down was our bottle of scotch.
All right, well, today's show we got McAllen Gold. So McAllen, if you're out there, we'd like a sponsorship.
Yeah. While everyone else is panicking right now and searching YouTube videos about a market crash, you should be out there and buying all that low inventory right now.
Yeah, sophisticated investors understand that you can make money in any sort of market, and that holds true here in London, Ontario in 2020. What is up, YouTube? It's 2020, which means the future's here, and in today's video, myself and Jeff Wybo, we sit down and talk about the future of real estate here in London, Ontario, and Canada. So I'm really excited to dive into this video. If you guys don't remember, Jeff and I used to do videos like this all the time back in 2016, 17, 18. Not sure if we did one in 2019, but pretty much every time we sat down, we were talking about, ooh, I don't know if the market's going to get a lot hotter. Well, what do you guys think we discussed in today's video? Well, let's actually just jump into it. You guys can find out. But again, we're going to be giving our predictions for the 2020 real estate market. All right, so I'm sitting down with Jeff Wybo. If you guys haven't met Jeff Wybo on my YouTube channel yet, this is Jeff Wybo.
What's up, guys?
So Jeff and I used to do these sit downs all the time and kind of chat about the market, the updates, things of that nature. In fact, I can very clearly remember a video either late 2017 or early 2018 where Jeff and I were talking about how hot the London, Ontario real estate market was. And back then we were kind of predicting that we thought that that trend would continue throughout the year, but if I remember correctly, we weren't sure how long it could sustain. So before we get into what we expect for 2020's real estate market, let's just catch up on what happened in 2018 and 2019. It went up.
Right.
A lot. In fact, London right now is one of the fastest appreciating markets in Canada. We're often seeing double-digit appreciation. It's pretty crazy what's been going on in the market. And to think way back when Jeff and I first met in 2016, at that time, I kind of felt like the market was heating up a little bit.
The only thing that went down was our bottle of scotch.
Yeah.
So if you guys didn't know, Matt McKeever did enjoy scotch back then.
So we're just doing a kind of an update, a Q1 update of what's going on in the London real estate market. Also just going to talk about the sort of stuff we've had going on in the last couple of months.
All right, well, today's show we got McAllen Gold. So McAllen, if you're out there, we'd like a sponsorship.
Yeah. So that was one of our YouTube things we tried to you know, show you guys that we are human, and that was pretty cool. Yeah. But it's only been shooting up since then, and with the warmer weather right now, it's just this winter as well. It's not even, nothing's going away.
That's something interesting to note. Like I used to always talk about on my YouTube channel, my favorite time of year is when it's super snowy to buy real estate. You know, we'd often joke and often would make Christmas Eve or Christmas Day offers. I made one on Boxing Day this year. So it's still a great time of year to buy, but because the weather's been so mild, it keeps a lot of the retail buyers continue to come out when the weather's mild, whereas when like it is really snowy, when it's really blustery, when we've got a foot or more of snow, all those retail buyers stay at home. So the market's still very competitive. Yes. Yes, all the 9-to-5 realtors stay at home, absolutely.
And right now at the mansion around us, we have a lot of new builds as well. I can't get a plumber over to my house right now that works for a builder because the builder has them doing a lot of stuff with all the new builds right now because it's such nice weather. They want to like pump these houses out right now. So it's very weather dependent as what I see what the market does, especially in southwestern Ontario. And like you said, if it's a big snowstorm, Toronto's not coming down the 401. They're going to say, how about next weekend?
Yeah, exactly. So let's just dive into 2020, Jeff. What are your thoughts, predictions, you know, what's your crystal ball showing?
Well, my crystal ball would be looking at Toronto before London, Ontario to see what ripple effect would be coming down here. I think we should have a little bit of a wave knowing if there's some kind of, like I won't say the crash word on YouTube, oh, I just said it. But, you know, a lot of clients like to ask that all the time, like should I wait or something? And we got more of an ABBA approach right now. Always be buying aggressively because ABBA, quote that. I think that was your quote.
Yes.
So, yeah, I don't see it right now in southwestern Ontario. Interest rates continue to get lower and lower right now. So,
In fact, right now there's a lot of very dovish sentiment from the Bank of Canada. So a lot of people now are predicting that we'll actually potentially see an interest rate cut in 2020. Now, this is something where it always frustrates me when listening to pundits and things of that nature, because for the last few years they've been prophesizing about how low interest rates can't remain. We're going to see a return to normal, and that's going to really put a lot of downward pressure on our real estate prices here in Canada. The thing is, in my opinion, the market's addicted to cheap debt. That's just the nature. That's our new reality. And to act otherwise is to essentially claim that you've got a better crystal ball than the next person. So I completely agree with Jeff on that. I think we're going to see dovish sentiment throughout 2020 when it comes to interest rates. And it just makes sense. It's what we've seen for the last couple of years at this point.
So if you're buying right now, we always just say make sure you're buying cash flowing properties. If you're buying on appreciation, and if something ever happened, a little bit of a dip, that might go down, but as long as you're cash flowing, hopefully you'll be fine. That's what we always say. And guys, like, they can change mortgage rules, the markets can dip. We just have to adapt. Everyone else can complain. This is when you go to town and make money. You're allowed to complain for like an hour, and then it's like, how do I make money off of any correction that happened? Because while everyone else is panicking right now and searching YouTube videos about a market crash, you should be out there and buying all that low inventory right now.
Yeah, sophisticated investors understand that you can make money in any sort of market, and that holds true here in London, Ontario in 2020. In fact, when I take a step back and look at affordability, there's a couple price points in this market that I don't like, but almost everything else still makes fundamental sense to me. So when we're looking at single family dwellings, single family homes in the over $500,000 price range, I start to get a little bit nervous about London, Ontario, because that's in essence what you can get a brand new build home for, is in the low 600s, get into the 700,000s. So when we're looking at resale homes, or even new builds, in my opinion, above 500,000, I personally don't have a lot of confidence, but I'd love to hear, what are your thoughts, Jeff?
Well, we're feeling the heat on the higher end properties right now, and there's even over $1 million properties in London just kind of sitting. They will find their unique buyers if it's a unique house, but the kind of subdivision cookie cutter ones are sitting a lot longer in this market. Our average price right now, I think it's around like $430 in London for like pretty much all the new builds and the resale. So that's the average, and you just got to think about it. That's where everyone's battling right now. So if they can't win in the 4s, maybe they shoot up to the 5s, but they're not getting into the 6s and 7s yet. You got to wait till the 5s is like battling to all, because every weekend what happens is there's open houses, and then there's offer dates, and then you get multiple offers, and this is kind of how it drives the market a bit, which is what I'm seeing. But right now they're all fighting in the 300s and the 400s right now. So you probably still get deals in the 500s in London, but the 6s and 7s, yeah, you can pick and choose right now.
Yeah, it's definitely a great time if you're looking at buying your principal residence here in London, Ontario, and you're looking at that above $500,000 price point. What's up, guys? Matt here. Have you ever wanted to do wholesaling? Have you ever wanted to go all in on real estate investing? Well, I've heard your demands from the comment section on my YouTube video, and we're looking to hire more people to join our team. Now, this is going to be a unique opportunity. You're going to need to fit outside of the traditional mold, but if you're willing to go all in on real estate investing, learn everything and do everything necessary to become a successful wholesaler, and you're willing to move to London, Ontario, and move into one of the mansions with me, well, let's do it. So we've got a process for you guys to be able to join our team of wholesalers. Right now, I have 7 full-time wholesalers working for me in southwestern Ontario, but we actually want to grow the team even more, a lot more in fact. But the requirements are, you need to be willing to go all in. So no other jobs, no side hustles, no other personal commitments. You just need to be laser-like focused on real estate and learning and personal development, because that's what this mansion's all about. In addition, you need to be willing to move to London, Ontario. I don't care where you currently live, but you need to be willing to move to London, Ontario. You need to be eligible to work in Ontario, all that good stuff. But otherwise, that's pretty much it. We're just looking for really dedicated, really hungry individuals that want to join our team. If you want to apply, send us an email, clickwholesaling@gmail.com. You're probably going to spell click wrong, so we're throwing it up here on the screen. We'll also have a link in the video description down below. But this is a once-in-a-lifetime lifetime opportunity, guys. You've seen the evolution of Adam Martin from my team over the years. He joined us back in 2018, and he knew nothing about real estate investing. He'd never made an offer, never bought real estate, never made $1 off of real estate, and today he's absolutely crushing it. I know there's a lot of people that aspire to be the next Adam Martin. As well, you've seen the evolution of Mike and Shahir from my team and how they've grown as individuals and wholesalers as well. In fact, we've even got a whole new crop of wholesalers that you really haven't seen yet on the YouTube channel, but they'll be coming soon to a video on your news feed. But beyond that, we need more wholesalers. This is really a once-in-a-lifetime opportunity. If you're serious about going all in on wholesaling real estate, I need you to join my team. Click the link down below, send us an email, and I look forward to chatting.
But right now, they're all fighting in the 300s and the 400s right now. So you probably still get deals in the 500s in London, but the 6s and 7s, yeah, you can pick and choose right now.
Yeah, it's definitely a great time. If you're looking at buying your principal residence here in London, Ontario, and you're looking at that above $500,000 price point, this is the time where you can get cute, you can start negotiating, you can start asking for the furniture, maybe you can get small vendor take-back mortgages, maybe cash back on closing if there's renovations you need to do. There's a ton of very fun strategies that you can implement at that price point that right now, if you're trying to buy in the $300,000 price point, you can't get cute with your deals, especially if they're on market deals.
Yeah, like a lot of clients will go to the bank, they get approved for something, say 300, and then they go start looking at these 300s, but these 300s go for 350 now, and they can't figure it out. And if you want to put in a mortgage clause, no luck. And the problem is there isn't any 250s on our market that they probably would even want to live at in mortgage to 300 and offer 300. So it's very tough for new buyers right now in those lower price ranges in 2020 right now. So it's only going to get worse but here's the thing. Buying real estate isn't a right. Like, you're not allowed to just purchase a real estate, so you got to follow what the market's doing. If Toronto's buying in London, so be it. That's the reality. You can't just keep complaining about that all the time, and I see that a lot. Everybody just wants to complain. I'm sorry, these are the rules. This is what the market's doing. This is what we have to do right now. So it doesn't matter. And then what happens is a lot too, your banks and mortgage brokers are not wrong when they tell you you need a financing clause or these other conditions. They're 100% right, but unfortunately, playing the game out here, it's kind of like you should wear a helmet, but you know you're not going to look cool out there if you wear a helmet, and nobody's going to let you play, so you can't wear a helmet. I don't know what sport would do that, but I mean, it's kind of like there are amazing rules, but if you want to like get ahead, you got to like take your helmet off and like win the game a bit. So. Yeah,
absolutely. It's really important that investors in particular adapt to the market fundamentals in today's market, and don't be using last year's strategies to fight this year's war. That's a big one in my opinion. And again, it's something that's taken a while for London locals like myself and Jeff to adapt to. Back in late 2017, 2018, 2019, at every point in time, it felt like the market was getting pretty frothy. But if we kind of leave our emotions at the door, if we take a step back and really think things through, from an affordability standpoint, this is what I always like to focus on. Here in London, Ontario, minimum wage, we're looking at $15 an hour. Well, if you're working full-time, that's about 2,000 hours a year. That means you're going to be making about $30,000 a year as a minimum wage full-time employee. What would a two-person household look like in that case? Well, they're making $60,000. Well, in that case, the average minimum wage earner household that's got a two-earner income, they can afford like buying a $200,000, $240,000 property. So when I view it through that lens, seeing where prices are going right now, especially in the starter homes and mid-level homes, it makes a lot of sense because affordability is there. Now in Toronto, where you're looking at prices of $800,000, but minimum wage is still the same price, that's where it becomes even frothier in my opinion, and there's greater exposure for you as an investor. But like Jeff mentioned at the start of the video, we're very focused on cash flow investing rental properties. So what it comes down to, we can still meet the 1% rule here in London, Ontario, because despite the fact that house prices and per unit prices have been skyrocketing, so has the monthly rent that these properties are able to demand. Again, because of the same affordability that I broke down of minimum wage earners. If we look at a minimum wage earner that's making $30,000 a year, well, the average Canadian spends about $30 maybe even upwards of 40% of their income on shelter. That includes utilities, rent, all that good stuff. If we look at 30% of $30,000, that's roughly $10,000 a year, or about $850 a month in rent that a single person can afford on a minimum wage job. Now, if you've got a 2-bed apartment that you're looking to rent, well, again, if we assume 2 income earners, all of a sudden they can afford about $1,600 a month. In fact, here in London, Ontario, 2-bedroom apartments haven't yet hit that rent price. So if anything, I actually see some room to grow on the per unit basis of acquiring larger multifamily properties, and that's kind of what we're doing today now. We're very focused on buying these larger apartment buildings, what a lot of my fans would like to refer to as Casey Wong buildings. And what's great is there's still a lot of upside to these deals if we can get tenant turnover, if we can do cash for keys or negotiate with the tenant, find a win-win opportunity, and get the unit turned over, get it up to its highest best use, and rent it out for what's currently fair market rents.
So it's not all bad news if you guys are looking for single families properties, but if you want to get into the multifamily property and save your money a bit, even though the market's shooting up on the single family homes, because that's what everybody wants, if you're just going to look for a duplex, you're going to be, the buyer pool is going to go down way down in London, Ontario. Just from what I notice, most people in this city don't live in multifamily. Maybe they live in multifamily in Toronto a little bit more, but like because they have like a basement apartment or something like that. But in London, not too many people live in duplexes. So if you start to look at duplexes, you can actually get a better deal and then have a rental helper instead of overpaying on a Sunday afternoon to buy a single family. So unless it's in the student rental market, because that's what would be the only other student rental to make money on it. But we're noticing that duplexes and triplexes are, the really good ones can fetch a little bit more, but once you get into a little bit higher amount of doors, it kind of goes to more of a price per door.
Yes.
Where do you think that changes over? Is it at the after triplex? Because it seems like you can have a triplex go $800,000, but if you divided it by 3, you wouldn't be selling it at the unit price of a 14-unit building.
Yeah, it's definitely somewhere in that 4 to 6 units or that 4 to 8 unit range that we really see properties coming down on a per unit basis. If you guys are curious, in the last year, you know, Jeff and myself, we've been buying anywhere from kind of $85,000, $95,000 per unit, all the way up to $140,000 per unit. Now, what really varies there is the condition of the building, the size of the units,
and terms.
Yeah, and really the terms. So you guys have heard me talk about this before on my YouTube channel, but when we're looking at these higher price per unit buildings, that's where our creativity as an investor is absolutely critical, because that's where you can negotiate a win-win opportunity with you and the seller. One other category that Jeff touched upon briefly there that I'd like to mention is student rentals. A lot of people think of London, Ontario as a great student rental market. I think in general that was truer in the past than it is today. We've seen a lot of appreciation, a lot of increase in the purchase price on student rentals. In fact, now here in London, it's quite common by the Western University to see it going for about $100,000 a bedroom, whereas by Fanshawe, you're maybe looking closer at $70,000, $80,000, $90,000 a bedroom. But back in 2016 when I met Jeff, you could probably still buy it $50,000 or $60,000 a bedroom. Now, the rent per bedroom has creeped up. I would say the average rent now is going to be in the $500 to $550 range for a bedroom in London, Ontario. But our per bedroom price has creeped up even more than that. So overall, your net returns investing in student rentals, they're definitely not what they once were, but they're still one of the better cash flowing performing assets that you can look to as an investor. Well, I think that that's enough information for this video. If you guys enjoyed this video with Jeff, make sure you smash that like button. Hit the subscribe button if you're new to my channel. And Jeff's also got a YouTube channel where he's often talking about being an investor, a realtor, and just some lifestyle stuff as well. Lots of amazing vlogs are going down there as well. So definitely jump over to it. Jeff Wybo, very easy to spell. That's just Jeffwybo. Otherwise, again, until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it, but if you're not saving it, I mean, like, what's the point, guys? Thanks.